Hello and welcome back to Strategic Investor Radio. And again, we're here at the AltsLA conference in Los Angeles. And we're pleased to have back with us Ted Parkhill, CEO and founder of Incline Investment Management out of the Lake Tahoe area. And we feel sorry for you, Ted, to have to live up there all the time. It must be rough here. So, Ted, tell us a little about you and the conference and Incline Management.
Thanks, Charlie. It's Ted here, and it's great to be back on Strategic Investor Radio. As you know, I've been a guest before, and I'm happy to be back. Thank you for having me. We are a systematic manager. As you mentioned, we're based in Tahoe, Incline Village, the north shore of Lake Tahoe. We like to say it's on the good side, on the Nevada side. So anyway, we are a systematic manager. We specialize in trading futures and equities. We do it all on a quantitative basis. We like to say we're directionally agnostic. We can trade short or long, depending on the directional move of the markets that we track. And we try to provide investors with diversification that they can't get anywhere else.
Okay, so tell us a little about the world of commodities. Now, 5 to 6, 7 years, commodities have struggled. I mean, I don't know how well you guys have done, but most commodity funds have not even been in the black most of those years. So how do you find investing in that? And are investors getting wary and weary of poor performance overall? How's it working?
That's a really good question because you're absolutely right. It's been a difficult period for commodity investors. We specialize in tracking all of the different commodity sectors. So when we say the word commodities, we think of futures, but you could trade S&P futures, you can trade currency futures, you can trade fixed income futures globally. We also trade those markets, but we trade the traditional commodity markets, we trade the energy markets, we trade the precious metal markets. And yes, it's difficult. In fact, most investors have found that diversification has actually cost them money over the last few years. And that's true. That doesn't mean diversification is dead. We still strongly believe that diversification is critical going forward. In fact, maybe even more so in the short to medium term. Investors are starting to realize that this bull can't last forever, and we're starting finally to see some interest in what we do.
So what is the story that you tell, Ted, about why investors should be interested in alternative investments such as commodities?
We like to think of it in terms of what the benefit is to the investor's portfolio. We think of non-correlation having value. If you can find non-correlated investments to add to your portfolio, you can even take a standalone, riskier investment, and at first glance, this is sort of unintuitive. You can take a riskier asset, add it into a portfolio, and actually end up reducing the overall portfolio's risk. And that's not apparent to all investors at face value at first glance. And so what we try and explain to them, the value of non-correlation, when you take something that's completely non-related to their existing holdings, let's say they have that traditional 60-40, and you add in a non-correlated investment like what we try and offer to investors, then you can actually lower overall portfolio risk and increase overall portfolio return. Of course, they have to bear in mind there's risk in trading futures, so they have to understand that. But that's the point, is that we try to provide a different type of diversification.
So, Harry Markowitz came up with that in the early 1950s before you were even born here, okay? I was born, but you weren't, and it's just very interesting that is actually the case. However, we all know that when an investor receives those monthly statements, those things that you just said are not primary on their mind. What's on their mind is that this particular investment really struggled. Are there any particular commodity investments that have significantly changed over the years? Is gold or silver used more in industry? Corn is used now in fuel. Cannabis is used in ways that obviously were not used in the past. Are there changes in the commodity industry that you guys have found to be potentially productive going forward?
That's a question I had to actually think about because there are changes. There's a lot of things going on in the business, but what we try to focus on is what hasn't changed are the fundamentals in some respects. All commodities move. They move in a certain direction. They either go up or they go down or they stay flat. And in the flat environments, there's no opportunity for an investor like ours. So we're looking for movement. The latest, change is, at least a market that comes to mind, is the Bitcoin futures introduction in December of 2017. That's a new market, right? It's cryptocurrency futures. What is that? And yet, it displays properties of traditional commodity markets. And we looked at it directly and very fascinated with how it could also behave. And we started exploring the crypto futures market, and we actually started looking at building a strategy that would offer investors exposure. What hasn't changed is the same simple fundamentals. Like, if it's going up, one should be long. If it's going down, one should be short. And that's the sort of the core tenet of what we do. We provide investors exposure they don't normally get from their typical broker or even their investment advisor. Is that we provide them with exposure that when things are going down, we'll be short. Whether that's Bitcoin futures or whether that's another commodity market. And to us, there's an advantage there that they're not getting from perhaps their typical advice provider.
So I presume you work exclusively through advisors. Do you take retail clients directly?
Yes, we do. We deal directly with high net worth investors directly. We also try and do our best to work with investment advisors. They're all, more and more we're seeing investment advisors starting to realize they need to offer more diversification to their clients. And I think their clients are driving some of that. Their clients are saying, hey, we're worried. We're worried about what could come. We're worried about markets. And if that's the case, then having a non-correlated solution in the investor portfolio could be really important going forward.
So given your strength in the world of commodities and alternative investments, how have you found the conference this year?
The conference has grown over the years. This is not my first time attending the AltsLA event. And what I found is that it is no longer just exclusive to California, that the rest of the country has discovered that this is a fantastic event to participate in and to attend. I think it's demonstrated by the number of sponsors that are involved this year. I think that the people that are here hosting, booths at the conference, the number of vendors that are, the variety is phenomenal, and there's a lot. It almost demonstrates the strength of the industry and how important it is to continue figuring out what the next best diversification investment solutions are. There's a lot of managers here. There's a lot of the vendors that supply the services to these managers. So I'm finding it really good. I found the discussions informative. I've actually learned a number of things since I've been here, so definitely worthwhile attending.
Great to hear. So Ted, let's close on a personal note here. A few decades ago, you left Manitoba, and now you have ended up at Lake Tahoe. Okay? Any regrets?
Thanks, Charlie. No regrets. I actually, I'm definitely a product of where I'm from. There's no question about that. I try to blend in well in Rome, and my accent might give me away to the occasional person.
It does.
Yes,
it does.
I'm sure it does. But no, we're very fortunate. We love Tahoe. My kids are triple citizens as it happens because my wife's originally from Christchurch, and so we get the benefit of all three of the best worlds we can think of. One of the things I'll add is I recently celebrated my 26th wedding anniversary, and we went to Normandy. We went to Paris and then went to Normandy, and I was on the beaches. I was on Juneau Beach where the Canadians landed. I went to Omaha and Utah Beach where the Americans landed. And I would say to any of the millennials listening to this, you should be thankful for everything that we have because of those guys. And it's a moving experience going to a historical place like that. I saw where my grandfather landed, and it's just an incredible reminder what freedoms we enjoy in this country. And I'm involved in a fantastic business that allows for sort of economic freedom as well. And I'm reminded that what a great country living in America is.
Well, Ted, thank you very much. And yes, I have taken those same routes about 5 years ago. Okay, and I'm reminded, just to close on, the statement of the supposedly one of the captains or whatever, that when they landed on Omaha Beach, etc., he said, gentlemen, he said, there are two kinds of soldiers on the beach, the dead and the soon-to-be dead. So your job is to get straight through and get up there so that you're not among those two groups. So, Ted, thanks so much for joining us. Really appreciate it. Final words for any of our listeners here.
Thanks, Charlie. Yeah, I think that if you're looking at your portfolio going forward and you have any concerns and you're looking at your overall asset allocation, you should start thinking about what advice you've been given. I don't think 60-40 is going to be the way to go going forward. I really strongly believe, and if anything, I can pound the table to say, look, now's the time to start looking at getting your portfolio more, introducing more diversification. That's the operative word. It's going to be going forward, and look for investment solutions that give you non-correlated investment performance. If you can find that, look for ways to add that to your investment portfolio.
Ted, thanks so much. Really appreciate you joining us today, as we always do, and we'll be right back.
Thanks, Charlie.